Hi, Suzy Rhoades with PassMasters here with this week's Student Questions of the Week. This week our topic is special types of accounts. You can expect this topic to be on your SIE Exam Series 6, Series 7, Series 65, and Series 66. Let's check out some questions. $529s you can set up for kids under age 18 also, right? So Coverdell ESAs can only be set up for under age 18. 529 plans may be set up for anyone of any age. So yes, 529s can be set up for someone under age 18 or for me, because you never know when I might go back to school. College savings plans have no contribution limit, ? Just a gift tax if contributions exceed the 5-year election. But 529 plans have aggregate contribution limits. What's the difference and what do these limits have to do with the tax deadline? Good question. So 529 plans and prepaid tuition plans are types of college savings plans. Different from a Coverdell ESA that has a $2,000 per year per beneficiary limit, college savings plans don't have a limit. You can put in as much money as you would like. Both of them, college savings plans and ESAs, are funded with after-tax dollars. And I suppose you could put money into both for the same beneficiary. You have someone who wants to put in $50,000 this year, they would want to fund a college savings plan. So most commonly a 529 plan. So the fact that there is no contribution limit into a college savings plan is a true statement. There is no limit. There is, however, going to be a limit as to the balance in the account that varies by state. College savings plans fall into municipal securities. They vary by state. So how much money can get into an account before there is no more money allowed to be put into that account? $250,000, $350,000, quite high amounts. So that would include the contribution plus earnings over time. So once it gets to that amount, whatever the state's amount is, the state will say no more contributions into that account. So you go up and open up another account in another state. I mean, that would be a lovely problem to have, but you could. You could definitely do that. So how does all of this tie into the gift tax exclusion amount? Many years ago, I vividly remember this phone call I had with my mother. She said, "Hey, honey, did you know that I could put in 5 times the gift tax exclusion amount into the 529 plan for Miles?" And I said, I did, Mom. You can also do it for Mason and for Max. At the time I had 3 boys was all. Now I have a 4th child who is a girl. And she said, "Wow, that's so amazing." And I said, "Yes, could you please?" And she just laughed. So it did not happen, unfortunately, but it could have happened. So whatever the current year's gift tax exclusion amount is. So handy dandy calculator. Let's just say that the current year's gift tax exclusion amount is $17,000 times 5. That's $85,000 that Grandma Cheryl could put into the account for Miles this year. She could also put in that same amount for whoever else she wanted, for as many people as she wanted without triggering the gift tax. The gift tax, if she put in, let's say she put in for Miles $90,000. That's $5,000 more than the 17 times 5, the example that I made here. The $5,000 extra, she would pay gift tax on. The person giving the gift that's in excess of this speeding up of the gift tax exclusion amount is the one who pays the tax. So she can't give any other gifts to Miles other than 5 times the gift tax exclusion amount into the 529 plan. If she gives any more above that over the next 5 years, she, the person giving the gift, will owe the gift tax. So differences here, right? So the lack of contribution limit is true. How big can the account balance get is a whole nother subject. Varies by state, quite high. So $350,000 should pay for your kid to go to school. I suppose it depends on the school. It should. And then there's the speeding up of the gift tax exclusion amount. So whatever the current year's gift tax exclusion amount times 5. So to as many people, it's oftentimes a question about grandkids, and grandma can do it and grandpa can do it. So if you've got 10 grandkids, you've got 17 times 5, 85, times 10, 850,000, times 2, because there's grandma and grandpa. So quite a lot of money can go into 529 plans before triggering gift tax. So what do these limits have to do with tax deadlines? Educational IRAs, terrible name, but that is what they were originally called. And that helps me to remember Coverdale ESAs must be funded by the tax deadline for the previous tax year. So generally April 15th, sometimes there's, it's on a Saturday, so it falls into the next Monday. So you can fund a Coverdale ESA for the previous year up until the tax filing deadline. Now, 529 plan contributions are never tax deductible on your federal tax return, but they may be tax deductible on your state income tax return. And your state is going to have its own state rules. So none of these tests are about state tax law. However, you should know your state's rules for your own life, right? For giving your clients advice. Some states require the 529 contribution to be made by December 31st, and some states will allow it to be made all the way up until the tax deadline. So not an extension deadline, but the tax filing deadline. When you get an extension, you get an extension to file your return, not an extension to pay your taxes. So whether or not the 529 plan contribution has to be made by year end or by the income tax deadline for the previous year is up to the state. So you'd have to check on your state, but it's a great question. Good one. Is there ever a reason to choose an FSA over an HRA? Okay, so who gets to choose? The employer. Both an FSA and an HRA are set up and funded by the employer. I would say you would rather have an FSA as far as an employer goes because there's much less administrative burdens for a flexible spending account, flexible spending arrangement. So funded by the employer, maybe funded by the employee, owned by the employer, easy to administer, FSA. HRAs can be used to pay insurance premiums. So health reimbursement account, health reimbursement arrangement, whatever they decide to call it on the test. An HRA owned by the employer, funded by the employer only. The money in an HRA may be used to purchase insurance. Not always, it's up to the employer. So HRAs have more administrative burden upon an employer. They have to make a lot of choices as far as how do they want the health reimbursement account to work, where an FSA is more boilerplate, if you will. So FSAs may be funded by the employee and employer. HRAs are employer only. FSAs are easier to set up and administer than HRAs. If an employer offers an HSA, does the employee still have to have a HDHP to qualify? Yes. So if an employer is going to offer an HSA, health savings account, the employee must be enrolled in an HSA eligible high deductible health insurance plan. So a lot of times the employer will have different choices. So the lower premium, the less premium cost will be associated with the HDHP, and the HDHP comes with an HSA. The employer may fund the HSA, the employee may fund the HSA belongs to the employee, which makes it much better than the FSA and HRA. However, you have to have an HDHP to have an HSA. The HSA rolls from year to year, where the FSA may roll a little bit of money. It's up to the employer. Most of the time we say an FSA is a use it or lose it rule, and the HRA may roll from year to year, but is entirely up to the employer. The employer sets all the rules for HRAs. So HSA belongs to the employee. So that is a benefit. And it's in pre-tax dollars. That is a benefit. The earnings in an HSA are tax-free when the distribution is for a qualified medical expense. The HSA is the only one of these medical savings accounts that may be invested in the stock market. So stocks, bonds, mutual funds. HSAs are quite exciting, actually, if you can stand to have an HDHP. That's it for this week's student questions related to special types of accounts. I hope you learned something. Please give this video a thumbs up, subscribe to our channel, and turn those notifications on. If you have any questions about this topic, just ask me in the comments below. If you'd like to check out PassMasters course offerings or to enroll in any of our programs, there is a link found in this video's description. Thanks for watching. I hope to have you as a student soon. Happy studies. Study, 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 pass!